Let me give you some financial highlights. JPR achieved 6,500 yen DPU as forecasted in the 28th period ended December 2015. Organic DPU growth is expected again in the 29th period ending June 2016. Our next DPU target is 7,000 yen. It has become realistic and is now on the horizon. Please see the second column that describes our internal growth. In the 27th period ended in June, single tenants from 2 properties had departed. Subsequent revenue decline was supplemented by refilling other properties in the portfolio. Together with cost control, we succeeded in driving up DPU. On external growth, last year, we acquired additional stake from other shared property owners to achieve external growth. This year, we intend to pursue acquisition from our sponsors. With respect to DPU trends, after bottoming in the 24th period, JPR has achieved dividend hike for 4 consecutive financial periods. This growth was mainly driven by internal growth. DPU has risen by approximately 2.5% or 150 yen per financial period. That translates into annual growth rate of approximately 5% or 300 yen. Let me give you details of our internal growth. This graph shows our average occupancy rate. It was 97.4% as of end of December last year. Regarding rent revisions, we used to experience more negative rent reversions than positive until June 2014 period. Then, the office leasing market in Tokyo saw change of tide in the middle of 2014. Since then, you can see we enjoy more positive rent reversions. JPR was one of the first players to enjoy upward rent reversions. 60 leases achieved upward rent revisions. This means out of the total tenants that renewed their leases during the period, over 20% of them agreed to raise rent. In other words, 1 out of 5 tenants said yes to rent hike. To give you some colors, the rate of rent increase was approximately 10%. We intend to take aggressive stance to attain more rent increases. JPR sets target rent level. In the current financial period, the base for the target rent has been raised by 2.7%. In our track record, we have met the target rents mostly when it was possible to raise rents. JPR will continue to endeavor to raise rent. On external growth, we have continued to work on our sponsor pipeline. Some of the deals have started to take shape, so I hope to acquire 1 or 2 properties this year. 7,000 yen has become reachable today. Rental income has been growing at around 1% per year. In our forecast for the 29th and the 30th periods, 13.5 billion yen income target is close to be achieved. After 6,700 yen DPU is attained in the current 29th period, there is 300 yen more to go to reach 7,000 yen. At current pace, organic growth is enough to achieve the target within 1 year. As I mentioned briefly, JPR is very keen to acquire properties from sponsors and others this year. In our growth picture, the ratio of internal growth to external growth is approximately 2 to 1. 200 yen plus 100 yen makes 7,000 yen. In this manner, JPR is going to attain 7,000 yen DPU target.